Hello everyone, it is Sterling here from Day Trading Forex Live, and this video is the January 2016 daily market review of the month of January again. And these videos started back in May of 2015. For those of you that have not been watching these videos, starting in May, I started recapping every valid trade on the euro dollar and the pound dollar, because that is what we cover in the daily market preview, which is a members video each night that pre-selects the exact manipulation points for the following day. The results of the last, in this case, 9 months, May through January, the compounded results of that 9-month period is a 195% gain on 2% risk. So you can go back through all those videos. I would encourage, if members want to go back, you can verify against the daily market previews. You can check everything. All the videos are saved, they're time-stamped, you can cross-check it versus valid trades. And during that time, again, every trade having an initial 2% risk. During that 9-month period, again, 195% compounded gain with a exact application of the strategy. In January and February, we had probably a 30 to 40% reduction in the amount of trades that we had. So we had less trades to begin with. And then number two, we had a lower win-loss ratio on average by about 15 to 20% reduction in our win-loss ratio. So two things hit us, not only the reduction in trade quantity, but also the reduction in win-loss ratios. And it shows, in my opinion, the biggest aspect of any strategy, and that is, how does it deal with tough times? Because one thing I can promise you is this: it's not about the person that makes the most amount of money, it's the person that loses the least on their big drawdowns. Through this month, we were never, with a perfect application of the rule set, we were never down more than 2.2%, and even with a very tough month, we still ended with a 5.8% gain. So, like I always say, again, if your tough months are still break even or slightly positive, you have one hell of a strategy, because you're dealing with a situation where whatever strategy you use, it is inevitable that you will go through a tough time. If your tough times result in a 20, 30, 40% drawdown, you got some serious issues. You got a massive hole you got to dig out of. But on the other hand, if you have a strategy that tends to have tough times that don't produce massive drawdowns, you're in a much, much better situation, because every year, I can promise you, at least 1 month will not, 1 or 2 months, depending on your strategy and what type of strategy it is, you will always go through times, especially as a day trader, where you have tough weeks, tough months. And if you can still maintain a break-even or positive scenario through those times, then you're in a very good position. That's what I think January and February illustrate. Anyways, let's go ahead and work through all of our trades in the month of January. We'll start off with the euro. It was a euro short. And it was a euro short from 09.40. That was the level that we had, just to show you that point in the daily market preview. This was a pre-selected level. Again, 09.40 was one of our upper points. This is our second upper point. The first upper point did not produce a trade, came into 09.40, and we did produce a valid stop run short. Stop run confirmation candle pullback hits our mechanical pullback criteria. The trade runs off for a full take profit. As I mentioned a few minutes ago, and I just want to, if I didn't say this as fully as I should have in the beginning, one of the things that's important to understand, you'll see me show the pre-selected point, and then the strategy is mechanical, as I say in every single video. There's no way to make it look better or worse. It either was a valid trade or it wasn't, and if you understand the rule set, you understand what I'm saying, because again, it's either a valid trade or it's not. It's either a winning trade or a losing trade or somewhere in between. But the mechanical application of the rule set allows us to have a very accurate representation of the results. And that's what makes these videos so accurate. It's what allows members to go back, cross-check all these trades, verify everything is accurate as well. As we continue forward, the next trade was on the pound. This was a pound trade from the 45 level, the 46.45 level. So this is what we deem as a backside trade. Not every level can be used as a backside point, but in this case, what we had, just to show you, daily market preview, January 6th, lower level, one spot 46.45. And we come into one spot 46.45. Let me get that line out of there. We come into 46.45. We initially break through. We come into the backside, creates a stop run, creates the confirmation down. And this stops us out by maybe 2 or 3 pips at the high here. Unfortunately, takes us from up 4% in the month to up 2% in the month. Every trade has an initial 2-to-1 reward to risk ratio. Initial risk 2% in all these videos. Therefore, a full loss, 2% loss, takes us again from up 4% to up 2% on the month. The pound had something rare occur this day, and that was 2 losses on one pair in one day. Quite rare we see that, but we definitely had that in this case. And for those of you that tend to question when I go through these videos and I say, okay, this is a newly selected point, again, what's important to understand, there's a mechanical criteria for newly created levels. But this video will illustrate something else. If I was cherry picking these new levels, I wouldn't be cherry picking trades that resulted in a loss. So this month, if you didn't add new levels that were actually valid based on our mechanical rule set, the month would have actually been better. And so this month hopefully illustrates in a way based on valid trades that these newly created levels are not created and I said it was a trade based on the result. It has to satisfy the mechanical criteria, and it's a trade regardless of the result. This month again would have actually been better off of just not adding any newly created level. But what we had here, 46.29, in the relationship to our strategy, it is a valid new level based on everything else around it. Not going to get into that because that's a whole other explanation in itself. Came over here, produced a stop run, confirmation to the upside. For those of you that are members wondering why the stop didn't go below this low, go back and check out the daily market preview from January the 7th because I fully explained what happened the day prior and why we went below this one based on the rules in the strategy, or the rules in the course that outline the strategy. So anyways, comes back down, hits us for another 2% loss, brings us back to break even at the start of the month. So sitting at break even. Continue over to the next trade. The next trade was from was on the pound, I should say. And so it was on the 8th. And this was a plus 0.8% trade roughly. It was a level that we had, which was at 46.10, I believe was the point. And 46.10 just to drag over that daily market preview here. This day we were looking only for the second push to the upside, so that was our cycle bias. We had a level at 46.10, again one spot 46.10 for the 8th of January. And we had a stop run prior to the start of the session. We had a valid stop run. We confirmed up, created the pullback for the entry, and this trade ran off to the upside. We closed prior to the 4:30 a.m. Eastern news, and that resulted in a 0.8% gain, which puts us at 0.8% in the month because we were obviously sitting at break even. We then go, the next few trades you're going to see, really we just kind of go back and forth, positive, negative, positive, negative. We go back and forth, and that was kind of the tough part of it, what I consider the tough part of this month. It can be a frustrating time, and so that starts off here with, again, another pound trade after the weekend. So we skip over the weekend. We go into the next day, or the next trading day, that is. And the level that we had was kind of a weaker point, but it was a point that I felt was valid enough based on the mechanical rules that we have set. It was a valid enough level to use, and this point that we had here was a 45.47. And so this level here, if we again drag this down to 45.47, and so we'll drag this over, show you this daily market preview, January 11th, the level that we had. We're looking for, again, the second push to the downside. Our protection when we're looking for a direction and the market breaks in the opposite direction is that a lot of times we just won't see the trade set up. It'll blow through the level and not produce a trade. Unfortunately, that broke down here today, one spot 45.47. That was our level. Valid stop run, valid confirmation. After that confirmation, we then have obviously whatever pullback you would have wanted. You would have been stopped out within the same candle there on the pound. That takes us from up 0.8% of the month down to negative 1.2% there on the month. We continue over to the next trade. The next trade was a euro short. This was on the 13th. And this euro short, again, was from a point that we had pre-selected. It was from 0870. And so level goes in right here. That's 0870. And so on the 13th, if we go over to the daily market preview from the 13th, drag this over here. What you'll see is again on the euro, looking for the third push to the downside. Very similar scenario. Unfortunately, just saw a breakdown in the cycle at this point. Again, 0870. That's our level, and what we had was we did have a very nice stop run from that point. I mean, as far as stop runs go, that's a very strong stop run. The confirmation back down, huge. The difference on this trade, personally, in this month was something a little bit unique that needs to be covered. We went from one standard of a broker to another standard because we were seeing some inconsistencies in the broker that we've used as a standard for the last year or so. And this was one where the inconsistency in the broker required me to go to another one. And when I took a poll, 80% of you did not hit the pullback to make this entry valid. But because I was switching over on brokers, I didn't have, or I couldn't reference the standard. And I didn't want to be accused of cherry picking and saying, well, that trade didn't hit, even though 80% never hit the pullback and therefore never would have been in the trade, our mechanical pullback point, that is. What I still wanted to do is I want to count that as a half loss, even though, again, 80% never hit it, the pullback. I want to count that as a 80%, or excuse me, I want to count that as at the very least as a half loss, because I always want to take worst case scenario in these videos, or at least a fair worst case scenario. And I feel like at least a half loss represents a situation where even though 20% of you were the only ones that hit the pullback, in this case, what that's going to do is at least give a fair representation to the downside. It doesn't ever look like I'm skewing the results to the upside. I never want to give that impression, and so that's why I'm going to take that as a 1% loss there as a half loss, and that brings us down from negative 1.2% in the month to negative 2.2%. Negative 2.2% was the worst drawdown we had this month based on a perfect application of the rule set, and that carries us over to our next trade, which was a euro short. This was a euro short on the 15th, and it was a euro short from 0963, so again the level 0963. This was a situation here where this was a newly created point that we had. The reason that we have to go to a newly created point on this day, just to show you the daily market preview so you know exactly what was occurring, we were looking for a second push to the downside, and this month we had more kind of breakdowns of cycle than we'd seen in quite a while. We had a level of 0884, one spot 0884, so that was the only point we were looking for a second push to the downside from. As we go back to the charts, just to explain this a little bit more so you guys know exactly what was happening, the 0884 level was right here. And so we actually broke that point prior to the start of the session, and that invalidates a level. So when the European session started, we couldn't use the level anyways, and we didn't have any other level in this area. So the only trade that becomes possible at that point is once the market hits the ADR for the day, the average daily range, then a reversal trade becomes possible. We deem that as a New York reversal trade because it typically will occur during the New York session. And the market had gone 130 pips at this time, which was well beyond the ADR, and that makes a reversal trade, a New York reversal trade off of a stop run of a level, makes that a valid trade. Now, what's important about this level, 0963, if we go out to the hourly chart, there's absolutely zero question about this level. This is the biggest level in the area. This level correlates to the January 11th high right here, and there's absolutely no other level in the area. So in regards to selection of level, especially if for you guys that understand the strategy, you'll understand that this level would be an absolute no question point about that level, or there's no question about that level, 100% a valid point if you understand the strategy. Huge level here, really huge level. Nothing else really in the area that's a sizable point. So when we got a stop run of that level, we got a confirmation of the downside. What we had here is we had a situation where we had a difference, and this is again, unfortunately, we're going through that time where we were going from one broker to the next, had another issue with actual confirmation and pullback here, depending on those of you that hit the break-even point. Therefore, I'm splitting the difference on this too. If you hit the break-even point, would have resulted in a break-even trade. If you did not hit the break-even point, you would have hit a full 4% take profit by the end of the day. I'm not going to count it as a full 4% take profit. I'm going to split the difference on this, and I'm going to call it a 2% trade. That takes us from negative 2.2% in the month down to negative 0.2% in the month. So again, we're going through this yo-yo back and forth, and the yo-yo is not done happening. So we skip over the weekend, and we had another euro short here from the 0871 level. So we'll drag this down. So here's 0871. This was on the 19th. So we'll take over the daily market preview from this day. What you'll see is that 0871 was not a valid lower point. We had 0805. That was the only only lower manipulation point we were going to look for a long option from. But the 0871 level, and this is again kind of illustrating the fact that these newly selected points this month that we had that satisfy the criteria, they were levels where if we were cherry picking new points and only picking the points that resulted in a profitable trade, then I can promise you the last two that would have skewed the results 4% worse than expected would have not been in place. And so this was one where I deem this as about a valid backside short. We had a valid backside stop run short off of this level, and I like this point because, as I explained in that daily market preview and the next daily market preview, we didn't have a lower manipulation point that was going to be stopping the price. So this is really a prime area for a backside short, especially for those of you guys that understand the strategy. You'll understand why, and that results in a stop out for a 2% loss, and that takes us from negative 0.2% in the month back down to our maximum drawdown of negative 2.2% in the month. And the yo-yo continues here with the next trade. It was a euro short the following day. So this is a euro short the following day from the 0899 level. Or, sorry, I said euro short, euro long. So what we had initially is we had a level, and this one I'm going to walk through a little bit about the actual strategy because it needs to be explained to explain the trade a little bit. The level that we had, the only lower level that we had was this point right here, and you'll see why this point got moved. We had 0903. That was our lower point. Now what actually ended up being our newly created point was 4 pips lower. It was essentially the same level. We talked about this a little bit in the following day's preview. Lower level 0903, and so we'll drag this over. And what happened with 0903 is that at the beginning of the day, or I should say during the time where we're not looking to trade before the beginning of the New York session, this was the hour and a half dead zone before New York where we don't look to trade, we broke the level with the candle body. And so what that requires is us to throw out the level and either throw it out permanently, or if a new level is set, reset the level to that point. So the level was reset here at 99. The mechanical criteria for a new level was created. That produced a valid trade at that, or a valid level at that time, which produced a valid stop run and confirmation here, stop run and confirmation long. And then the trade was closed out on a stop run against the trade that we were in there from that short. Had this short been during valid hours, and I probably would have taken that short back to the downside. A couple issues with that though were the distance into the levels. You didn't quite have enough distance, and to me, I was definitely biased a little further long on that day, or wanted a push up. I like that push better, although we didn't have a cycle bias. So I really liked that long setup there, just unfortunately didn't have enough follow through, and that results in a plus 2% gain, taking us back up to negative 0.2% in the month. And then we go over to the next trade. This was 2 trades in one day on the pound. First trade was a pound short. So this is a pound short on the 22nd. I'd say the majority didn't confirm off this level here. It was a pound short from 43.22. And a lot of you did not confirm, so you're not going to have this trade. But again, in all fairness, I did for the standard that we were using at the time. Therefore, that's why I'm counting this as a full loss personally. Again, I know most of you didn't confirm. If you didn't, well, then your results are 2% better. We don't see a whole lot of times where a few tenths of a pip makes a difference in the trade results. But with a mechanical strategy, we have mechanical rules that can either be valid or not valid by a tenth of a pip. If it's hitting the criteria, it can be either doing it by a tenth or not satisfying the criteria. So over the months of January and February, we saw probably more times where a few tenths of a pip made a difference between a valid confirmation and one that wasn't. This was the case. 43.22 was the level that we had. This was another scenario where we were only looking for the second push to the upside. While we did get our second push up, again, January 22nd, 41.97 was the only level we were looking for the second push long. While we did get that second push to the upside that we were looking for here, we got that move, we were not able to capitalize and catch the long move. So the only trade that becomes possible, as we talked about earlier, is once the average daily range is hit, then and only then we can start taking trades against the previous move, what we deem as New York reversal trades. 43.22 was the first valid point that I felt was a solid level. Again, most of you didn't confirm, but I did on the standard, and therefore we're going to count that as a full 2% loss. The secondary upper point that we had was the pound short from 43.58, another short from what was a much better level. Both of them are still valid, counting the first one as a 2% loss, which takes us down to negative 2.2% in the month. But then we had another nice short, same exact type setup, stop run after the ADR has been hit, confirms down, provides the pullback for the entry, full 4% trade. That brings us back into positive territory on the month, 1.8% up on the month, and we continue over to the next trade. Next trade was a pound short again, and that was here on the 26th. This trade was a little bit after hours. I still deem it as a valid trade. It was a break-even result, so it didn't really matter as far as the month-end results go. But it was also from 43.59, which was our last trade was from 43.58. Big level. It was a big upper level that we had. And so to drag this over here for the 26th, here's 43.58. That was the level that we had. Actually, this was still from 43.58. Sorry, I think I said 43.59. So 43.58, and what we had was, again, a basic stop run. Here's our confirmation candle. Pullback was provided on the following candle, and this resulted from 15 pips from the high, which would have been right here, where the entry was on this specific setup. The break-even result would have been here. You might have been up a pip or two. I doubt it. You might have been down a pip or two. Again, counted as a break-even trade because it would have been a pip or two to either side of break-even on this setup, depending on exact entry. We continue at 1.8% of the month. We close out the month with a nice pound short from 43.97. Again, 43.97. This level here is a very nice setup that we had, kind of a unique setup. For those of you that are members, I would encourage you to go back and look at the daily market preview for the following day, because this walks through a little bit of a same rule set, but it was a slightly different application we don't typically see. So here was the level, one spot 43.97. That was our upper point. There's 43.97. We create a valid stop run of that point. So we get a valid stop run and confirmation, but this occurs during Asia. Therefore, we don't take the trade at the close of that confirmation because we can't take the trade. We're not during our tradable hours at this point. And so what we still need to see is we still need to see a valid stop run during tradable hours, valid confirmation during tradable hours. So here's the Frankfurt Open right here. The market's still in the stop run zone. The candle count's still valid. This would be the fourth candle in the count, produces a confirmation now, provides the pullback. For those of you that are members, there's a video in our live training room videos. I would refer you to the October 30th, 2015 New York session recording, October 30th, 2015. It talks about stop runs that occur prior to the start of the session, briefly touches on this point. And I would also encourage you to look at the daily market preview for the following day after that trade, which would have been February 1st. As I cover that trade a little more in depth, I think I cover it also in the room that week. So I also cover it on the February 2nd, 2016 New York session recording, which you can also watch and get a little coverage on that. That 4% trade takes us up from 1.8% up on the month up to our month-end total, which is 5.8% of the month. Again, very tough month. I would consider that as a tough month. That was not easy trading during the month of January. And that's why it was a great illustration of how discipline and patience are the key to those difficult months. Because if you don't have the discipline, if you don't have the patience, then you're going to wipe yourself out making stupid decisions. And that is not unique to traders. That is across the board. When that discipline breaks down, when the patience breaks down, the profits and the account size breaks down as well, because that's when the bad mistakes start to occur, and what happens when people start to break down. So a couple things to close out here with this video. One, for those of you that are members, I would encourage you to take a look at DTFL Pro. DTFL Pro is, for those that are members or non-members that don't know about it, DTFL Pro is an automated software that trades the strategy. So what it requires is every night, what you do is you go to your daily market preview here and you pre-select these points. So you'd pre-select the upper level on the euro. In this case, you'd put in your one upper point here on the pound. Then you'd go and you put in your two lower points on the pound. You'd put that into the program, which is here. So here's what DTFL Pro looks like. You put in your PP lines, your points that you're going to be trading from. That's what they're called on this. And you pre-select whatever points you like. You can remove the points. And so basically what you do to start the day is, on this day, you would simply remove your lines, whatever they were. Your first upper line here, you'd put in, again, upper PP line. You take it from here, just to show you this. Shrink this down a little bit so we can show you. If you were trading on, say, January the 29th and you wanted to put in these levels, you'd take this one upper point right here, 43.97, and you would plug it into this point right here. You'd plug it into your first upper line, you'd write that in. So you can see that's exactly what I did here. I took in those points, I put in the one upper point that we had on the pound. You do this for the pound as well as the euro. So I put in the one upper point, 43.97. I put that as my upper line right there, my upper PP line number one, and I would select that to trade that level. I put in 2, I'd put in 3, and I would select a start time on the day and set it from there. You'd also go over to your other pairs. If you're trading other pairs, you would set it the same. What it then does is it then trades the actual confirmation entry from those points as accurately as possible with an automated program. There will always be slight differences between what DTFL Pro can do and a manual application of the rule set. 95 to 98% of the time, it is a perfect application of the rule set, and there will be slight variances, because I'm a firm believer that an automated program cannot perfectly replicate what a human can do, and that is why pure EAs fail. That's what makes DTFL Pro different. That's why we've seen such a positive result with it, because the mechanical aspect, the selection of the levels, is still done mechanically. That has to be done mechanically, because that is the one aspect of the strategy that requires some discretion. While there are mechanical aspects to that, it will require some discretion. That's also why I pre-select that for members during the learning process, because it's showing, it's not just giving you a course and saying, best of luck in applying the course. It's saying, hey, here's the rules in the course, and here's how we take the rules in the course and we apply it to the live market. The point being is, it's for those, let's say you live in the US, you want to trade the London session, you don't want to be up for London. It's a great way to do that, or vice versa. You live outside the US, you want to trade the New York session, but you can't be there. A good way to do that, and a good way to apply the strategy if you are working at that time, or maybe you're working both sessions. But anyways, side point there, if you are a member, you can go ahead and check that out a bit more. Contact Rick. Ton of information on that. For those of you that are non-members, go to YouTube, type in DTFL Pro, and you'll find a ton of videos on it as well. What I was going to say about the learning process, and for those of you that are non-members, this is specifically directed at you. One of the things that I had always wanted to do ever since I can remember was I always wanted to learn to fly. And this is an analogy I give all the time. For those that have emailed me, I've probably given you this analogy. When you learn to fly, you have a lot of written information that you go over, a lot of written information. You technically know how to fly. You technically know what you should do. But there is a massive difference between what you know and what you can actually do. This was really illustrated to me, and it made me think of learning to trade when I went to land in a crosswind the first time. Now, your instructor's sitting in the right seat next to you, which obviously that's important. What you have to do, you know what to do. You first straighten the plane with the rudder, get it running down straight down the runway, because when you're landing in a crosswind, the plane crabs into the wind. So you straighten it out so you can obviously land straight. And then since you've now straightened the plane, the wind will try to push you off the runway, so you then lean into the wind. Like you're on a bicycle leaning into the wind, you do the same thing in the plane. And then you just simply, you're keeping you're keeping yourself straight down the runway by your feet keeping the plane straight with the rudder, and on the yoke you're leaning into the wind to keep yourself from being blown off the runway. So that process of controlling the plane with your feet and your hands, while you mentally know how to do it, it is very different between knowing how to do it and actually doing it in a live condition. And I firmly believe that learning to trade is very, very similar. The breakdown with a lot of strategies is not necessarily that the strategy doesn't work. I'm sure there's other strategies that will be profitable over the course of time. But the breakdown comes from members simply getting a course and then getting thrown into the live market saying, best of luck, go apply the course. It simply does not work like that. So that's what we do at DTFL. We try to give you the course, which obviously outlines what to do. But then the most important work starts once you've gone through the course, and that is going through those daily market preview videos every night and seeing, okay, how does Sterling apply the level selection process? What is a valid setup? What is a valid confirmation candle? What is a valid trade management process? And when you see it happen time and time again, what you'll begin to see is not just book knowledge, but you'll have applicable knowledge that you can take to live market conditions. And that's what DTFL Pro is about, that live daily support. So I would encourage you, if you're looking to learn how to trade, I'm a firm believer that nobody offers the type of support we do, especially for the price. Very low one-time price for lifetime access, no continuing fees, and you have, again, lifetime access to the support, daily market previews, live training sessions twice a week that are recorded if you can't be there, members forum, member support from me, and obviously the course or any updates that are done to the course in the future. Anyways, that's it for the video. I hope you liked this video. I hope it gives you a little bit of insight into what we do at DTFL and exactly what type of results we see. As I always say, this is on the euro and the pound. If you want to trade other pairs, that's fine. You can trade other pairs and have a lot more opportunity as well. If you have any questions, feel free to shoot us an email at support@daytradingforexlive.com or simply daytradingforexlive@gmail.com. Either email address will work, and I'd be happy to answer any questions that you may have. I'll see you all back for the next month-end review, which will be the February month-end review. Until then, happy trading.